Alright, hey everyone, this is Jack and welcome to your Friday video. Pretty interesting short week. You had a big selling moment on Wednesday going into Thursday and almost a complete 100% retrace back into the Tuesday and Wednesday high of 4,000. So what does this mean whenever you take a look at the big picture? That's what some of this video is about. The other half is about gold and silver. So let's talk about equities and bonds. On the right-hand side, you can see a daily chart, and pretty much for the past 10 to 14 days, bonds went higher from January 1st. Okay. At the same time, S&Ps did not fall apart, and if you're considering Wednesday's pullback a falling of apart, if you will, then it's kind of natural to do that whenever you're trading at the daily 200, which is this dark blue line right here on the left-hand side. So it's not uncommon. You can see this in a few instances before, back in December and November, right here and right here. And what does it mean moving forward? Well, there's two things that are really, really obvious, and I think even though they're obvious, we need to respect them. So the first thing is a cup and handle on the daily chart right about here all the way through December going into the end of January right now. But a cup and handle at the daily 200 moving average? So you're telling me that there's a chance that we could continue higher into 4150 and 4200? I am considering that as an outcome heading into the February monthly expiration. I also like that bonds went up and so did the market. Things aren't really falling apart. In fact, if I zoom in on an hourly chart on the left-hand side and really kind of zoom out so you can see how we've actually been trading, is we've actually been sideways and pretty range bound all the way since the new year. In fact, inside that green square that just disappeared, you could consider this big move that we had all the way through New Year's now kind of the ending stage of consolidation and distribution. Therefore, an argument to the upside. A full-on retrace takes you back into 40.50, and on top of that, I'll go back to the daily and show you that on the S&Ps you have a normal squeeze and that's fine. On SPX, on the daily chart, you don't have anything. And so maybe the answer to all this is if we gap down on Monday, do we buy it? And I have some specific levels that you can pay attention to. And the first one is 39.50. If we break down below there, I'm expecting somewhere in the lower 39s. All the meanwhile, the weekly chart continues to tell you that this is a short from here. And I'm not so sure that I want to do that because we didn't necessarily fall apart, and there's one big Fibonacci that's worth considering. It's not that one. I'm going to draw a new one. It's the October low to the big high that we had here right at almost 4,100. And it's to show you that that retracement all the way back down to the previous zone that we were trading, we'd have to break down below 38.80. So a true reversion to the mean. And an argument for, if you have the voodoo lines, an argument for more upside on the right-hand side is a voodoo line right at 4,100. It's red. We call it the fire line. And on top of that, we didn't really have too much disruption from that bond move over the past 14 days to the upside. So I see this more as a magnet that we are going back up to 4,100. Outside of that, it's kind of out of scope. You know, from there you can kind of speculate into 4,200 if you want to. You know, 4,200 is also kind of significant because it's very close to the August or the middle of the year highs of last year. So are we just taking out one big chunk at a time upwards above 4,100 to ultimately get back to the August highs? I don't know. I mean, that's kind of out of scope, like I said, for right now in this video for 4,300 in the S&Ps, but it's definitely something to consider. Outside of that, more bullish ideas circulate around SLV, silver, and gold. Silver chart on the daily has a high compression right now. You can see this here on the left-hand side. It's pretty fantastic. You know, I'm a big fan of buying the dip on a strong trending commodity, and so far gold has been great, and I think silver is about to play catch up. So in the rooms we were discussing, you know, buying the 21.5 GLD, SLV calls going into February and March, and then on GLD, you know, if gold's running up to 2,000 again, then the calls that you're buying on GLD at the 176, let's just say you're buying the Delta 60s or something like that on a pullback, then that kind of opens up the playing field. If gold's going to continue to run, then, you know, even better for you because you're just kind of early to the party. What we're waiting for on gold futures is another daily squeeze, and right now it's just kind of extended. So that's kind of why I shift my focus back and forth between gold and silver, even though they're both like, you know, brother and sister, because they can have different types of charts, right? And SLV has a beautiful daily chart, good green 10x bars here, respecting the 8, which is the yellow line. A nice reversion to the mean would be pulling back below 2150. You can see this better on an hourly chart. So, you know, 2180, 2160, that's where it kind of gets interesting. For one more pullback, you can see a really repetitive, a repetitive pattern. Inside the hourly chart, we'll go up, we'll go back down, we'll kind of go up and then phase down, go way up, go back down. It's choppy, right? So on the next dip, since we are making higher lows and higher highs, you know, you're trying to get long SLV at 21.5. However you want to do it. But inside of that, daily high compression squeeze, super interesting. And even better, if it can get a, you know, kind of give us a signal of, hey, it's firing to the downside because there's too much overhead resistance. Perfect. Let's see if we can get caught up at about 21 or 20.5, worst case scenario. Then we're the first ones into the long game, and the long game is letting all this compression release going into February and March. It's a really cool chart, and it's something we'll be following on Monday, Tuesday, Wednesday of next week. Right now, I'm looking out for a gap down on Monday in the market because we are extended no matter what, especially after that Friday melt up. And we'll see what makes sense from there. All right, we'll see you in the rooms on Monday. Have a great weekend, and thanks for the time. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.